On Thursday, Lordstown share price showed a return in confidence from investors. The big question is, will this enthusiasm last? Hi again, everyone. I hope you're all doing really well. So the last two trading sessions have been very interesting for Lordstown Motors, ticker symbol RIDE or RIDE. We saw a 20% drop in price during Wednesday's trade, with the stock falling to $1.51 per share. This was on the news that the company was uncertain on whether they would close the very important deal with Foxconn, which involved the sale of their manufacturing plant in Lordstown for $230 million, which was delivering much needed cash as well as business partnerships to get their endurance pickup truck finally manufactured with a shared risk model. The subsequent 50% or 71-cent rise that followed on Thursday was on the back of the news that the deal had indeed been finalised, which saw the stock price shoot up to a closing price of $2.22. All in all, making for two very dramatic days of trading for RIDE stock, of which I don't think I would be surprised if CEO Robert Ninavaki and the board are slapped with a please explain from the SEC over all of this. Anyway, the securing and finalising of this deal is an important step in the longer term survival of Lordstown Motors as they finally attempt to get scaled up manufacturing of their endurance pickup vehicle underway, which has already been delayed by about 9 months so far. While this move allows shareholders of RIDE to breathe a sigh of relief, it appears that they are not fully out of the woods yet. According to an article in Motley Fool, Lordstown still requires a further $150 million in cash to get through this year alone. That's a further to the $230 million in proceeds that they have just received from the sale of their manufacturing plant to Foxconn. Now, I know what you're all probably thinking. Gosh, it's expensive to manufacture an EV. That is a big yes, especially with the current supply chain problems we're facing. Beyond that, you're probably now thinking, where is the extra $150 million in cash going to come from? And what will happen if Lordstown are unsuccessful in raising it? Well, Lordstown Motors seems to have a few options, all of which are going to be painful for coming up with this additional $150 million. Obviously, the most logical route is an equity raise. I am of the belief that an institutional placement will likely be the most logical pathway for the company. I don't see them being able to raise this level of funds from their existing retail base. Among major investors, I wouldn't be surprised if Foxconn or their parent company, Taiwanese electronics giant Honhai Precision, is given a high priority for such an offering, given that they've already got a fair bit invested and partnered with Lordstown Motors. I can't see Lordstown doing a debt raising over all this, as they don't have any income at the moment, and therefore I think most institutions are unlikely to loan to them on these grounds. Therefore, making equity raising the most logical route for the company and positioning Foxconn as the most likely party to get those funds from. On the flip side, if Lordstown is really struggling to get the finance, another possible alternative is a total buyout, which again, Foxconn seems like a logical resource here. Although they may not be totally keen to do so, Foxconn may view such a situation as an opportunity to strip key assets from Lordstown at fire sale prices. Foxconn, having thrown a major lifeline to Lordstown, have hedged their bets, having announced yesterday that they will also manufacture Fisker's second EV vehicle, the Pear, at Lordstown's facility from 2024. By gaining greater control of Lordstown's assets, this could make such a deal as the one with Fisker a more profitable move for Foxconn. The Fisker vehicle, given that it is targeted at being under 30k when it comes to market, is likely to be one of broader market appeal than the Endurance, thus making such a deal more lucrative for Foxconn than perhaps what the Endurance deal with Lordstown Motors will have. Of course, all of this that I'm saying is speculation, and I do hope that Lordstown is able to get through this final hurdle and come up with the $150 million cash that they need, although I suspect doing so is going to bring some further pain for shareholders in some form. Although maybe some of this has already been priced into the share price, which has fallen quite significantly already this year. It is a hard one to determine and is up to the markets. Anyway, that is about it for this update. What are your thoughts on Lordstown Motors at the moment? Are you feeling relieved after yesterday's finalisation of the factory sale? Where do you think the extra $150 million in cash is going to come from this year, if it comes at all? Let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favour. Cheers.